Ladies and gentlemen, good day and welcome to Saatvik Green Energy Limited Q3 FY26 earnings conference call. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. I now hand over the conference to Mr. Prakhar Porwal from Ambit Capital Limited. Thank you, and over to you, sir.
Good morning, everyone, and welcome to the Q3 and 9 months FY26 earnings call of Saatvik Green Energy Limited. Today we have with us Mr. Nilesh Garg, Chairman and MD, Mr. Prashant Mathur, CEO, Mr. Abni Jha, CFO, and Adfactors IR team. We will begin the call with the opening remarks from the management, after which we will have the forum open for the interactive Q&A session. I must remind you that this conference call may include forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. The statements are not guarantee of future performance and involve risks and uncertainties that are difficult to predict. I now hand over the conference to Mr. Nilesh Garg, Chairman and MD of Saatvik Green Energy Limited, for opening remarks. Thank you, and over to you, sir.
Hi, good morning, everyone, and a warm welcome to Saatvik Green Energy Limited's earnings conference call to discuss our performance for the third quarter and 9 months ended FY26. Thank you for joining us today and for your continued interest in Saatvik. On behalf of the board and the management team, I would like to sincerely thank our investors, analysts, and stakeholders for the trust and confidence to continue to place in us. The first 9 months of FY26 have been a period of steady operational execution, disciplined capacity utilization, and continued strategic progress. While the second quarter saw temporary headwinds due to monsoon-related execution delays, logistics disruptions, and the impact of GST rate reduction, the operating environment improved meaningfully in quarter three, allowing execution momentum to normalize. India's renewable energy sector continues to remain structurally strong. Government initiatives such as PM Surya Ghar, PM Kusum, CPSU Scheme Phase 2, and the national target of achieving 500 gigawatts of non-fossil fuel capacity by 2030 continue to support long-term demand for solar energy. The progressive increase in government allocations for rooftop solar schemes over the past few years reflects rising policy intensity and provides greater confidence in the sustainability of demand growth. Simultaneously, the industry is witnessing a clear shift towards high-efficiency technologies, reinforcing the importance of scale, reliability, and technology leadership. Against this backdrop, Saatvik continues to strengthen its position as one of India's leading solar module manufacturers. Our Ambala manufacturing facility is fully operational at an annual capacity of 4.8 gigawatts, supported by high utilization levels of over 81% during quarter three, and a diversified customer base across utility scale, C&I, EPC, and distributed segments. During the period, we successfully commissioned and operationalized a 2 gigawatt in-house EPE film manufacturing facility in Ambala. Moreover, we continue to make steady progress on our greenfield integrated manufacturing project in Odisha, which will comprise 4 gigawatts of module capacity and 4.8 gigawatts of solar cell capacity. The project is a critical milestone in our journey towards backward integration, improved cost competitiveness, and long-term margin sustainability. In parallel, our module businesses continue to secure repeat domestic orders, and we remain focused on expanding selectively across adjacencies such as solar pumps and inverters while maintaining capital discipline. With that, I would like to now invite our Chief Financial Officer, Mr. Abni Jha, to take you through our financial performance for quarter three and 9 months ended FY26.
Thank you, Nilesh, and good morning, everyone. I will now take you through the financial performance for the third quarter and 9 months ended FY26. For the 9-month period, Saatvik delivered a strong year-on-year growth across revenue and profitability, driven by higher volume, stable realizations, and disciplined cost management. Revenue for the quarter is stood at 12,570 million, registering a 143% growth over Q3 FY25. EBITDA was 1,647.6 million, up 134% year-on-year, translating into EBITDA margin of 13.11%. Profit after tax came in at 987.2 million, reflecting a 144% year-on-year increase. The sequential improvement in Q3 was driven by normalization of dispatch and logistics schedules, pickup in project execution post the monsoon season, and continued strong demand across utility scale and C&I segment. From an operational standpoint, total production during Q3 was 759 megawatts. Capacity utilization remained robust at 81% in Q3 and around 82% for 9 months FY26, underscoring the strength of our execution capabilities. Revenue for the period stood at 29,407.8 million, registering a 137% growth over 9 months FY25. EBITDA was 4,693.4 million, up 135% year-on-year, translating into an EBITDA margin of 15.96%, reflecting sustained operating efficiency. PAT came in 3,007.9 million, reflecting a 145% year-on-year increase, with a PAT margin of 10.23%, supported by operating leverage. Our greenfield integrated project in Odisha remains on track with 4 gigawatt of module capacity scheduled for commissioning by the end of FY26 and 4.8 gigawatt of cell capacity scheduled for FY27. This expansion enhances vertical integration, improved cost control, and supports sustainable margin performance in the future. During the quarter, we successfully commissioned and operationalized our 2 gigawatt in-house EPE film manufacturing facility at Ambala, making a major step in our vertical integration journey. This investment strengthens supply chain security, enhances quality control, and improves margin stability, reinforcing our focus on long-term operational resilience. From a balance sheet perspective, the company remains financially strong with healthy returns ratios and continued focus on prudent capital deployment, even as we invest for future growth. As of the end of the quarter, our order book remains healthy at approximately 5.05 gigawatts, providing clear visibility for the coming quarters. Overall, the financial performance for Q3 and 9 months FY26 demonstrates Saatvik's ability to scale profitably, maintain balance sheet discipline, and execute consistently in a dynamic operating environment. With that, I open the floor for the questions. We will be answering your questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Can you hear me?
Yes, sir. Very clear.
Thank you, sir. Thank you for the opportunity and congratulations on good set of numbers. So my first question is with respect to the capacity expansion. We will be adding a 4 gigawatt of module by the end of FY26. So my assumption is around 8.8 gigawatt of module will be working and will be operating in FY27. And when will the cell capacity of 4.8 gigawatts cell will be starting to operationalize?
Yes, good morning. This is Prashant Mathur. So the module plant commissioning will happen in the last around March of 26. The equipment installation will start. And then there is a ramp up which happens. So in the first quarter, we will start the commercial production from the module plant. And this is in one stroke, it is 4 gigawatt of module. So it takes, the ramp up happens over 3-4 months time. So we should start news in the first quarter, around mid of the first quarter of next financial year. Cell installation machines will also start around the same time, but cell takes little more time to stabilize and ramp up the efficiencies. So we expect the commercial production from the second half of next financial year. So assuming around October is the timeline which we are planning for commercial production of our cell line.
Understood, sir. And so, due to the rising silver prices, as well as China stopping export rebate in solar cells and modules, there has been slight increase in module and cell prices. So, can you give the ballpark realization figures for the module as well as cell for the quarter?
So, the inherent nature of this industry is that the price volatility is always there, and prices are determined by not only the commodity prices but also various government policies, taxation, duties, and so all these factors, and that is where a strong and decision-making management is very important in any operations. But the way we structure our business is we take care of the fluctuations in the commodities. But the prices also has risen because of the silver and aluminum and copper prices impact. And so, the effect could be marginal in the short term, but long term the prices adjust in the market according to the behavior of the commodities and the input material prices.
Understood. So, and what is the realization figure for the quarter?
For the quarter, our EBITDA is 13.11. And for the year, our EBITDA is 15.96%, close to 16%.
No, sir. I meant the module and cell price realization. Module realization, like per rupees per watt. How much are we selling it for?
Absolute number we cannot tell, but what we can say is that the prices dipped a little bit in the last quarter, but it has gone back to the original level again in this quarter because of the rising prices.
Understood,
So
sir.
as I said, the prices fluctuates up and down due to all these factors. And since there's been a lot of fluctuation in the silver prices used to be about 15-16% of the module prices. Today it is close to 25%. So that is the kind of impact the fluctuation has given to the input price of silver only in the module price.
Understood, sir. And so my final question is, during the quarter, how much of the total revenue at the consolidated level was from modules and how much was from solar pumps?
So solar pump is a very recent of our business. This year we target to make it a business unit, a standalone business unit. But as of now, the solar pump revenue mix in our business is close to 0.5%, 3.5%.
3.5%.
No. 0.35%.
So basically, this entire 1,250 crores of revenue is basically from sale of module, if my understanding is right.
No, around 95% of the sales is in the module sales, but in EPC also there is module involved. In pumps also there are module involved, but these are all counted in the module sales.
Understood, sir. And sir, can you give the guidance with respect to solar pumps? How are you planning to expand the revenue or this business segment in the coming year?
So our solar module versus the rest of the business this year expected to be 95 and 5%. But as we are expanding into EPC business, pump, inverter, the target for going forward is to make it to 15%, which we are trying to achieve in the next couple of years. Also, this quarter we have started our encapsulant plant, so 2 gigawatt manufacturing of encapsulant. We are also setting up now manufacturing assembly of inverters also. We are also getting into cell manufacturing. So cell manufacturing gives us additional margins because you have a DCR policy which is giving extra margins for if you are a cell manufacturer. So all that will add on to our overall numbers in the period to come.
Understood, sir. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question, please press star and 1 now. The next question is from the line of Pinang from IDBI Capital. Please go ahead.
Hello. Am I audible?
Yes, please. Good morning. Please go ahead.
Yeah. Good morning, sir. Congratulations for your results. So my question would be, is very, from the bidding point of view or the order book that you have, is like how the pricing works? Because given the volatility in the silver and the copper price, which is the very critical input for your raw material, so is it a pass-through formula or is there is something hit that normally company has to take?
So order book is a mix of large utility customer, C&I, but the order book does not consist spot orders and retail, which is also a sizable chunk of our business. So if you see our order book, we have executed close to gigawatt in this quarter, but we have also added new orders, and today our order book is over 5 gigawatt, which translates to about 6,500 crore. Now, some of the orders which are long-term are devised in a way which takes care of the change in the dollar fluctuation, change in the input cost. So either the end customer secures the cell or gives us financial instrument for us to secure the cell. Also change in law. These are the three things which we take care of while devising any long-term contract. And these long-term contracts I'm talking of is between 6 to 12 months cycle. But then there are other orders also which are short-term, which needs to be executed in a month or till 4 or 5 months period, and those could be fixed as well. So it's a mix.
Okay, sir. And sir, second question and the last question is, in the recent budget, government have exempted the critical raw material to manufacture the glass. So would that be would have a advantage in the maybe not immediately, but in maybe coming 1 year or 2 years, like in terms of the better margins being glass being locally manufactured. If any inputs can be highlighted. I understand, it's too early to say, but just to understand.
Yes. So it's too early to say because we are not into glass manufacturing, but we expect it to have a positive impact on the glass prices, and
okay.
It should help reducing the input cost for modules.
Okay. That's it from my side. Thank you, sir.
Thank you very much.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all participants in the conference, please limit your question to three per participant. Thank you. The next question is from the line of Gaurav from Axis Mutual Fund. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, I just wanted to know what are the market prices for DCR and non-DCR modules in the market today?
It is not fair for me to comment on the market prices.
Sure. Fair enough. Second question is, what is the share of DCR versus non-DCR in our sales? What we are selling?
So since we are not manufacturing cells as of now, DCR is only in our retail part. So
Okay.
I would say it's maybe around 3-4% of our monthly sales.
Fair enough.
But so yeah, that's what in the earlier answer I was saying that with Saatvik the value unlocking is around the corner, and that is because since our cell manufacturing is about to begin, and so the value unlocking from cell manufacturing and DCR is going to come in the year next year.
Fair enough. Just last question, sir. What is the capex that we're planning for the cell line that we're setting up?
So the capex for cell plus module is about 1850 crores, and for cell part is 1500 crores. 1350 crores. Sorry, 1350 crores.
Understood. Fair enough, sir. Thank you so much. That's all.
Thank you.
Thank you. Participants who wish to ask a question may press star and one this time. The next question is from the line of Prakhar Porwal from Ambit Capital. Please go ahead.
Hello, sir. Just two questions. One is, what is the sales volume of this number? I understand 756 megawatt is production. Wanted to know the megawatt sales.
920 megawatt in December. In Q3. Yeah, in Q3. And overall sales is 2058 megawatt.
Sure, sir. And sir, on your margins, if I see 13% orders, including other income, X of that is around 12.2%. So I understand prices would not fluctuate so sharply in just a matter of one quarter. So maybe it was some commodity inflation that we couldn't pass through on the spot order. So what was the reason for this margin contraction?
So Prakhar, if you see, even in our guidance, we have said that 13% EBITDA is a realistic expectations for the year. However, if you see for the year, we are at 16%. The marginal dip in this quarter was, as you have rightly said, was the impact of the fluctuation in the commodity pricing
And also the dollar.
and the dollar. So these were the two fluctuations. But this impact will should show positively in the fourth quarter of this financial year, because the market adapts to the prices with a lag, but it actually adapts to the prices.
Understood. And so just lastly, on exports, given all this duty with US, how do you see exports to US, given we had around some exposure back in 24? So any outlook there?
So we are still evaluating the trade policy, but it is a very welcome and a positive step. 18% from 50% is definitely good for us. And as you said, rightly said, last year we were doing exports. We were building the business there. We are still exporting, though it is less than 1% of our overall sales. But we are still exporting. But we were exporting where we were not taking any tariff risk. for the US market. So we have the foot in the door, and we will be pursuing the US market, especially now when our cell manufacturing is also going to start soon. We will be positively pursuing the US market, both for our cells and modules.
And this is 18 is over and above the Section 201 duty, right? Which is 14%. The 18%.
Yeah. So that nitty-gritty needs to be evaluated, because the announcement has happened, but we have not got the full details of the policy. I think it is still not signed. The more details we should be seeing in the following weeks, then we can really comment on that.
Sure, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Abhi Sehgal from Singularity AMC. Participant got disconnected. The next question is from the line of Aniket Madhwani from StepTrade Capital. Please go ahead. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello, am I audible?
Yes, you're audible.
Yeah, good morning. I just have two questions. Firstly, on the realizations, since you said that we are back on the original realizations, do we see them staying the same going forward?
Again, I really cannot comment, because silver prices are really going 9% up and down on a daily basis. But what I was saying was that the module prices, which were at a number in the first half of the year, dipped in the third quarter, but is again back to those numbers. If the commodity prices keeps rising, obviously that will reflect in the module prices also. But if it stabilizes, which is actually good for any business, then we should see around the same prices.
Okay. And secondly, on the interest cost, there has been a sharp increase in the interest cost in this quarter. Any one-off reason for that, or is it going to sustain at this level?
Yeah. So so the upward trends in the commodity prices was actually impacting the sales prices also. So we have taken some short-term position for sale, and for to finance that, we have taken some short-term borrowing, and because of that, the interest cost is temporarily sort of, which will be normalized by March.
Okay. And lastly, any sort of targets you have for the output in FY27, or also you can guide for that on the module manufacturing side?
For FY27? Okay.
Yes,
So future can be seen from the past, and if you see, our growth pattern has been 88% CAGR growth in revenues and 250% growth in the PAT for last few years. This year also we have grown over 100% in all, be it revenue, EBITDA or PAT. So this number should we will try to defend these numbers in this for the year, and this is the kind of growth which we are also expected to grow for the next year as well.
Okay, that is from my side. Thank you.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 this time. The next question is from the line of Raman KV from Sequent Investments. Please go ahead.
Thank you for the follow-up. I just want to understand with respect to cell, which is currently our raw material. For how many months did we procure cell in our inventory?
Cell, so normally it depends, but we try to procure cells for we keep inventory for about 3 to 4 weeks, and then in transit, so about 6 weeks inventory.
And now, and at the current, because of the fluctuation in the silver prices and other.
Sorry, we missed your question, sir.
Sir, the line for Mr. Raman got disconnected. Should we move to the next question?
Yeah, please.
Okay. The next question is from the line of Sarang from Vimana Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, on the raw material price increase, wanted to understand, are you able to fully pass on these raw material prices, or because of rising capacity, rising competition, do you also have to take a hit?
Yeah, good morning, Mr. Sarang. It is, as I said earlier, your order book is a mix of long-term orders where you have the ability to pass through, and then you have short-term orders wherein these are inbuilt in the prices. Is the background noise? It is inbuilt in the prices. So in some you are able to pass through, and some you are not able to pass through. But if you see the procurement, material procurement, though we try to keep inventory to minimum level, but if you see our interest cost reason is because we have secured our inventory, because when you have fluctuating prices of this magnitude, then you try to secure your raw materials. So we have done that also. So, but fluctuations up and down are part of this industry, and any person who operates in the industry has the understanding of when to secure the material and what prices to book the orders.
Got it. Understood. And on the cell side, I'm sorry if I missed it, but when will you be commissioning the plant?
Cell commercial production, we should start somewhere in October 26. Commissioning of the plant will happen in the second quarter, which is in July to September. Commercial production should start somewhere around October.
Got it. And how much time did you take for this, like from groundbreaking to October 26? How much period is this?
It took us almost 15 to 18 months.
Understood. And so one last question on the competition, how are you thinking about it? Because on the module side, at least, there has already been about 140 gigawatt of ALMM capacity. And even on the cell, many players are increasing their capacity. So it's about 30 right now, expected to go to 50, 60 gigawatt in a year. So how do you look at that?
Competition is always welcome because that also expands the market. If you see this year also, last year about 32 to 34 gigawatt installation happened. This year itself, the pace which is going on, I think India should be over 50, 55 gigawatt already. And with the rising energy demand in India, electric vehicle, battery storage, green hydrogen, India wants to be a rising economy, developed economy. So all this will drive the energy demand and installations in India. So even at this level, with the capacity utilization, average capacity utilization of the industry somewhere around 40 to 50%, we don't see over capacity. And also with the India-US trade deal, the risk which was in some forums have been talked about, that those capacities which were made for export market will now end up in India. I think that has also got addressed. So we don't see market flooded with that. In cell manufacturing also, there's a difference between the the cup and the lip. So these are announcements. The reality is today only 26 gigawatt of cell manufacturing is there, out of which 12 about 12 gigawatt is mono PERC, which as more cell capacities will come, will become obsolete because that's a outdated technology. So cell manufacturing, it takes time for a new player to understand the dynamics and enter the manufacturing and be able to fully commit doing it for a longer period of time. So we welcome all competition, and I think we have spent 10 years in this business, and we should be able to handle those market dynamics.
Understood. Got it. Thank you. That was very helpful.
Thank you.
Thank you. The next question is from the line of Abhi Sehgal from Singularity AMC. Please go ahead.
Hi, sir. So just to follow up on the previous question, what kind of DCR demand do you foresee coming in the next 2-3 years once ALCM is in?
So the mandate which is to develop the ecosystem in India, and that from module to now cell, and which is expected to shift in 28 to ingot and wafer. So the vision is very clear that we want to manufacture everything in India. So the shift from module to cell will start happening once ALMM, and there is a transition time. But if I'm assuming that from June 26 onwards, the tenders which will be bid out, and then the tenders take 18 to 24 months to see the light of installations. So when the market will be 60-70 gigawatt, then that kind of a demand is expected for Indian made cells, because once ALCM comes in fully, then the mandatory requirement will be that the cell and module have to be made in India.
Got it, sir. And any internal discussions, or do you plan to integrate further back to ingots and wafers as of now?
Yes, we are working on it, and we'll be making announcement in the future. Our first priority is to get our first project started and running, but those developments are also in the line. And also there is a draft policy from June 28 for ingot and wafer. Once there is some kind of clarity on this policy, our plans are ready and we will firm it up.
Sure, sir. Thank you and all the best.
Thank you very much.
Thank you. The next question is from the line of Hitesh from SBI Journal. Please go ahead.
Hi. Thank you. Am I audible?
Yes, sir.
Hello, sir. Good morning. Sir, I have a few questions. One is that what is you have said about your capex plan of about 1850 crore. Can you give me that capex schedule? How much is for 27 and 28?
So this project is entirely for the 4 gigawatt module and 2.4 gigawatt cell. So this is all already everything is on track. Both the equity and debt are raised fully, and the project which we were talking for Odisha, which will start from the first quarter of FY27, and October 26 These are all for this project only, and it's already in the stage wherein it will be commissioned, very soon.
So that means this 1850 crore will be deployed by the end of FY27, H2 FY27, right? Fully deployed.
Yes.
Okay. And sir, can you tell me what is the current debt today by the end of 9 months?
You are asking the term part of it, or you are asking the all together?
No, gross debt level or net debt, whatever, 9 month FY20.
So it is 749 crores to be precise.
It's a net debt or it's a gross?
Net debt.
Including short term, including working capital.
Okay. And sir, is there any change in working capital as a percentage of sales if I see net working capital over the same period last year? Or is it the same, or has it increased? What is the change?
No, so the change is just to take the, as explained in the previous questions, that there was a high volatility in the raw material prices. So we have taken certain position to ensure a smooth operation. So to that extent, our leverage is increased, but otherwise we are at the same level.
Okay. And sir, the thing was that the next capacity you said earlier that will be the addition will ramp up from Q1 FY27 onwards. So does that mean the Q1Q for this quarter is with that kind of 81-82% of utilization level which you reported in Q3? So to that extent, there would be kind of a flattish revenue on a Q&Q basis. Volume on a Q&Q basis.
You mean quarter 3 versus quarter 4?
No, so yes. Yes.
So normally quarter 4 is the busiest quarter, and now all our 4.8 gigawatt is operational. So I cannot give a absolute quantitative statement, but we will continue to give decent growth over quarter on quarter and year on year.
Got it, sir. My just a clarification. Thing is that you had operated 4.8 with the capacity of 4.8 gigawatt by the end of 9 months FY25, right? And additional capacity is going to add Q1 FY27 only. So I was asking, with that kind of utilization level of 80%, that volume is likely to be remain flat on a Q&Q basis. That is what the clarification. Yes. I am not asking absolute number or any growth or anything. I am just asking.
You're talking about
Q1 to Q1.
For next year?
Q3 and Q4. Q3 to
so
Q4.
For next year, our 4 gigawatt module will start. So from 4.8, we will become 8.8. Obviously, there is a ramp up. So we are not saying we will have entire 8 gigawatt available for the next year. Yes. But we will have sizable growth expected next year also.
Okay. Okay, sir. Got it.
And our cell will start giving revenue from the second half of the year. So that will be an additional cell revenue will also.
No, sir.
Cell profitability will also add. Yeah.
No, I am not going next year, sir. I am not going next year.
No, so I understand, Hitesh. So, so what we are trying to communicate here is that your questions was right, that from Q4 to Q1 comparison, the production, the capacity will be like flat because it will take some time to ramp up. So that is to that extent we are right, but and what we were trying to tell you that the capacity, additional capacity will be available, but it may not be available fully from the Q1.
Okay. All right. Yeah, that's all. That's it. Got it. Thank you, sir. Thanks for this call.
Thank you.
Thank you. The next follow-up question is from Raman from Saatvik Investments. Please go ahead.
Hello, sir.
Yeah.
Can you hear me? So, yeah, I just missed the debt figures. What is our current net debt figure?
Current net debt figure.
749 crores, to be precise, which includes term debt and the working capital.
Understood, sir. Thank you, sir.
What was it?
Thank you. Ladies and gentlemen, this was the last question for today. I now hand over the conference over to management for closing comments.
Thank you very much. To summarize, Saatvik continues to execute on its long-term strategy of building scale, integration, and resilience in a rapidly evolving solar manufacturing landscape. Our focus remains on sustaining high utilization of existing capacities, timely execution and stabilization of the Odisha integrated facility, selective expansion across EPC, solar business, inverters, storage, while maintaining capital discipline. We are on track to transitioning into a fully integrated solar energy solution provider. We remain mindful of industry cycles and continue to prioritize disciplined growth over aggressive volume expansion. Our diversified customer base, technology-focused approach, and execution capabilities provides us confidence in navigating industry transitions effectively. With a strong order pipeline, improving execution environment, and a clear strategic roadmap, we believe Saatvik is well positioned to deliver sustainable growth and long-term value creation. Thank you once again for your continued support and participation. Have a very good day. Thank you.
Thank you. On behalf of Saatvik Green Energy Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.